The man from the Pru made Prudential a household name in the UK, but the insurer has changed out of all proportion since then. And now, with technological and product changes and huge overseas expansion, it's decided to break itself in two. The fund management arm, M&G, along with its UK and European operations, will form one business. Its operations in the US, Asia and Africa the other. They'll both be London-listed companies and in the FTSE 100. I spoke to the chief executive, Mike Wells, a little earlier and asked him why.
Because the businesses have got to a position of size and strength where we think they're better off as two independent corporations. The growth and success of the UK business, the growth and success of the US and Asia business, they have less in common, and we think there's a chance to unlock value and to improve the life of most of our stakeholders.
How should investors look at the newly formed M&G Prudential? Is this going to be a business that bears more comparison with the likes of Aviva and Legal & General, or over time do you see it becoming a specialist fund manager like standard Aberdeen Investors?
Well, it has some similarities with each of those firms. I'd like to think the best of each of them. It's got a very successful asset management business in the active space, not passive, and isn't lacking any portfolios. So there's no, we're not doing this to fill any sort of need. It's got the most successful with profits fund in the country. It's got very successful distribution in Europe. It's got a very successful with profits book, which again is a fairly unique attribute to those firms. So it's not analogous to any of them. We think it has very, very high quality earnings. It competes with a number of those firms, for the discretionary savings dollar here in the UK and in some of them in Europe. But we compete pretty effectively with them. They're good firms, but we think we have the capabilities to win here.
And the newly formed Prudential PLC, the international part of the business, for how long is that going to remain London listed and London headquartered when, after all, its activities are going to be elsewhere in the world?
It's true, but I think in the sense it's true the activities are elsewhere in the world. It's not necessarily true that the headquarters needs to be anywhere else.
Following the logic of this breakup, though, wouldn't it also be logical to separate the new Prudential PLC into separate American and Asian constituents? I mean, after all, those two markets don't have an awful lot in common. The Asian market is very fast growing, full of young people entering the workforce, whereas the American market, by contrast, you've got, I think you were saying today, 10,000 people retiring every day for the next 20 years.
Yeah, I feel like some days, Ian, I can name them. We do focus on them heavily, and they're a key part. It's the largest wealth transfer globally in history, and the baby boomers, and disproportionately more of that in the front 10 years or so of that period of time. To your point, the diversification across ages helps, but so that's good from a risk reduction, as are different exposure to credits, markets, currencies, and things. Although most of these markets are disproportionately dollar denominated, I think the piece in Asia that is coming next. So what we've been working on the last few years is to increase the size of our health business, and health in Asia has more of a wellness flavor to it than just pure health insurance. But that's over £1 billion now in last year's earnings, which is growing really nicely. I think we would be foolish to ignore the coming retirement needs.
A lot of these Asian economies going to grow old before they grow rich.
I think it's a real challenge. I mean, one of the things you hear on the ground in a lot of countries in Asia is the traditional retirement model was younger members, usually children, adult children, taking care of senior members of the family. And as families have gotten smaller in Asia for a variety of reasons, that model is stressed. So, I talk to young people that are worried about how they're going to help fund their parents' retirement. I talk to people who are about to retire who worry about how their children are going to contribute to the retirement or help fund it. And it's seen more like you're seeing here in the UK or the US, where people are feeling, they're responsible for funding their own retirement.
And what do you think about stock markets at the moment? We obviously had a shakeout right around the world last month. We've had a bit of a recovery since then, but should we really expect stellar returns after what we've seen over the last few years?
Well, it feels to me, this is a bit self-serving, but it's more of an active market than a passive market. I think it's individual companies now. The easy gains from the low interest rates and companies refinancing are done. Rising rates help some companies and hurt others. And I think now it's more name by name than just the overall market going up or down. But I think there's plenty of opportunity.